Well, good morning, everyone. Welcome to our Tuesday morning trading session. It is Tuesday. Yes, it is. It's Tuesday today. Hold on one second while I get you my monitor. All right. So the NQ just opened. Well, as did the rest of the index markets. And it looks as though there's going to be a little bit of an opening gap here this morning. Let me show you what I mean. We'll go here to the Eagle. And you can see the market left off up here around the 46.75 level. Very, very quiet through the Asian session. Then the London session opened and boom, down she goes. Very quickly too. Only took about 20, 30 minutes for the market to decline like that. And it went sideways for a few hours, and here we are into the open, into the North American Open. So it will be interesting to see. There's going to be a big opening gap above the market here, whether it's going to try to get into that gap or whether all that downward momentum will just continue to send the market lower. Crude oil put in a nice little rally out of the open this morning as well. Here's crude oil on the Hawk. Crude oil prices opening right down here. A few minutes later, we had a first micro-macro cross signal and nice little follow through on that. So it's looking as though crude a little bit more bullish today. In my nightly update, I was actually looking, well, crude was setting up for a potential short today, and I didn't believe it. I couldn't bring myself to think that crude is actually going to trade below $40 a barrel, but I'm a little bit relieved to actually see the market spike. That it's a little bit stronger. Here on the NASDAQ, looks like the Raptor, we're getting our cloud crossover happening. We'll see whether or not prices retreat here a little bit. Normally we'll get a little bit of support out of this cloud, come back with a buy signal, and that might be worth an attempt. As I said, the market could be trying to get into that opening range gap. But for the most part, it does look as though the NASDAQ is going to be heading a little bit lower today. And we could see that also on the daily charts. That was another update. Here, we'll just build a daily chart. In my nightly update, I suspected the NQ might be topping out. And there we go. There's the NASDAQ on a daily chart. And you can see quite plainly, here's our test of the extreme. The market seems to be falling off a little bit. In fact, if I throw the equivolume bars on here, oops, let's get the wick back. There we go. That looks better. You can see with the equivolume bars, let me shrink this up a little bit. A lot of volume up here. And you can tell by the width of the bars, right? So the market comes up, a lot of volume, comes down, a lot of volume. Volume always comes into the market at turning points. So here it's rallying up a little bit, and now we're getting some volume again. Currently the bars, this current bar is a little on the thin side because of course there's not very much volume in today's session yet. But we'll see. The NQ is slippery. Every time you go, or I go to sell it, it seems to turn around and rally. Is anybody else having audio problems? Richard can't seem to hear me. Can I get a sound check, please? Okay, thank you guys. I'm just going to send Richard a note. All right. Jim giving some advanced decline numbers here, but remember the opening gap is going to skew this a little bit. He says just under 900 on the buy and 1700 on the sell. But like I said, that big opening range gap is going to have something to do with that. Gold also very sideways this morning. I need to find a third market here. Gold has been very blah. Let's throw the British pound up there. So here's the British pound. And with the British pound, you'll also want to use your alternate settings. So when did this happen? So we had a nice little green bar sell on the Eagle, but this occurred in the wee hours. Let's take a look at yesterday's session, see whether it was a little bit more active. There's the North American Open. Well, not a bad day. Let's check the day before. Nice steady progression, actually. If you don't, it's not especially fast. So once you take a signal, if you're okay just waiting for it to play out, it looks like the British pound may not be a bad instrument to trade, especially if your time zone allows you to get into the market a little bit earlier. Yeah, the whole last week it looks like there's been some decent signals coming out of the pound. Throw the DAX in there too for a moment. Oop. Okay, having a little trouble loading that data. Let's try natural gas. All right, so the NASDAQ made a little bit of a run up here. Not a bad little move. There was our first micro-macro cross. This is the type of trade you'd probably want to run a relatively deep stop on. But it did hit the profit target, which is always nice. Okay, and now they're starting to slow somewhat. The advanced decline numbers getting a little more balanced. Just over 1,000 on the buy and 1,600 on the sell. The big opening gaps are always problematic. Because a gap can very often lead to a market that just ends up moving sideways. And we certainly had no shortage of that yesterday. Okay. Now I'm waiting on that soft edge or that cloud crossover signal here on the Raptor. Here in the Hawk, we are getting a macro pullback signal. I want you to pay attention though to these wicks on these bars. You see how the market topped out here, showed a little bit more sensitivity here. Yes, this is a macro pullback signal. Yes, it is one of our high probability signals. However, given that the market is showing some reluctance to head higher, you're going to want to do one of two things. You're either going to want to dial down your risk or perhaps enter late. In this case, if the market is going to continue higher, it will likely develop into a 4-arrow consolidation. We still need to cover it a little ways. So we've currently got, well, 1, 2, 3, 4. Well, this is our first micro macro cross. 1, 2, 3. The next signal will make our 4-arrow consolidation. There it is right there. And like I said, these highs are a little problematic. So I'm going to postpone my entry, I think. It's not the sweetest looking setup we've seen, but it is a 4-arrow consolidation. So the Geiger counter hard over here on the buy side. It looks as though the buyers are trying to chew through some of those orders. It looks as though the Falcon is producing a trendline touch signal. Also, technically, I suppose, a trend change signal because the trend line did go out of sync here for just a moment. So here with the Falcon, we can anticipate a triangle hash mark. We had the warning dot there for a moment. It has since reversed and is starting to flash a bearish warning dot. Okay, here's something I don't talk about very often, and that's a failure of the macro pullback signal. It is typically a counter trend signal, which is why we don't normally do it, but this is really starting to smack of a trend change. All right, so here comes our hawk. It's now into yellow bars. We are getting a soft edge sell signal here on the Raptor. We always like to see a test of the extreme before we look at doing a counter trend type signal. Let's see how well the market is following this trend line. Well, pretty close. So if I did just a single and we sold here and covered above the high, so looking at a soft edge sell here, just looking for the market to retrace back to this trend line, perhaps to the hard edge. I need to risk it all the way up here, however, in case there's going to be a bigger test of the extreme. Just making a couple notes here in my trading journal. Here comes the bulls again. This is the problem with counter trend trades. This is why I don't focus on counter trend trades very often, because once you're counter trend, it's really, really hard to take a with trend trade. But the market making a test of the extreme, that's not a real big surprise. We were expecting that. We need to see them, the sellers take control here, start moving the market lower again. After which we can become a little bit more aggressive with our stops. Okay, here's a green bar sell on the hawk. This is actually a good selling opportunity because we can cover the trade right above the high. Oops, got away from me there a little bit. There we go. Come on, down you go. Ah, you stinkers. Well, we're gonna give them a moment here. Obviously, we're in a rather sensitive area for this particular market. This whole 46, 54, 55 region. This is very near where we opened today. All right, this current bar here on the Raptor, I'd really like to see this finish lower. That would enable me to begin rolling my stops. Until that happens, this market is going to continue to go sideways. And I'm not real happy about it if it breaks the highs. Well, obviously, it will not only stop me out, but it will probably get into that opening gap. There they go, stinkers. Yep. Okay. Just making a note here on my trading journal. So that opening gap keeps beckoning the market. Oh, don't you dare. Don't you dare tag me by a couple of ticks and then reverse. Oh, I think they are too. Oh, that burns me. To me, there's like I say, your stop is a safety net. To me, there's nothing worse than to be tagged by a tick or two, only to watch the market reverse and go in the direction you intended. That's just not nice. All right, if you excuse me for just a moment, I will be right back. Okay, I'm back. What did I miss? Not a whole lot. um, yeah, Brian says, oh shoot. I'm having a little trouble loading my data on my other chart. And I don't want to reboot my Ninja right now for obvious reasons. But Brian says the support and resistance lines are being respected pretty well on the E-mini, not so much here on the NQ. Well, they are and they aren't. We're kind of fudging the line a little bit. We're coming in a little bit late here. Normally, they're a little bit more accurate. See, like this. So respect the primary resistance, that come down, take a little bounce off of the median line, come down, take a little bounce off the primary support, and so on and so forth. So the NQ a little bit more up in the air. This green bar sell disappoints me. Well, for obvious reasons, but this was actually a pretty decent signal. Now the green bar sell, you know, it is a weaker hawk signal as far as hawk signals go. It's certainly not a first micro macro cross, but you know, we had a test of the extreme. It was looking as though the market was going to retest the lows. That was worth a go, and we had the opportunity to cover above the highs. Unfortunately, it did one of those. So it looks like it's another day of sideways trading until they get their act together. Getting a red bar buy. Oop, we're getting a red bar buy. Getting another soft edge bounce or soft edge sell. Sorry, I'm stumbling over my lips again. Getting another soft edge sell here in the Raptor. Pretty much in the same neighborhood where we sold the last one. This annoys me very much. If it comes out of here with a buy signal, it will be a double pullback. And a double pullback would be a with trend signal. It would. Let me show you another double pullback. First, I got to find a trend. No, actually, we didn't get one there. That's a little odd. Well, here we go. We got to go back to yesterday's trading to have a double pullback. So the market goes into the hard edge, comes out, goes into the hard edge for a second time, comes out, and then finally picks up the trend. So here we have the market going into the hard edge from the other side, comes out, goes into the hard edge again, and now we're looking for it to perhaps come out or fail and head lower. Once again, getting another test of the extreme, but all these yellow bars telling us that we're in a little bit of a sideways trading range at the moment. Yeah, my charts have done something odd. All right, here comes the eagle now. We're getting a buy signal on the eagle. This is out of the hard edge, and we should be getting a buy signal here on the Raptor. Here is that double pullback, and I'm going to be a little bit late on this one. Let's see if we can't catch it with a limit order. I knew a fellow who was a pretty aggressive trader, and what he would tend to do is he would let the market trigger, and then he'd try to pick it up on a limit order a tick or two, in this case a tick or two lower, just to try to get that little better entry. Now we're trading near the highs of the morning as well, so this is not exactly what you would refer to as a high probability trade. Oh, I guess I'd better get a stop in play here. What I'm going to do is I'm going to try to keep it below the hard edge here, somewhere near the trend line. And here we come with the first micro macro cross on the hawk. Oh, jeez, it's going to be one of those days, is it? Just wandering. Overall, I like the market short, but it's searching for a direction. So, when we identify the market moving sideways, the best course of action is to let it get outside of that trading range. So long as it's inside that trading range, any trade you take is going to be a low percentage trade, a low probability trade. Let me wind back here to yesterday's session where we had a similar problem. Am I on the right day? 23, yep. And we spent most of the morning like this, going sideways. We established a pretty substantial sideways range. Nothing really exciting until the market finally gets out. Then we get our test and retest, right? This is what we're looking for. Breakout, retest. Oh, retested a couple times, but once you get that retest, then the market is finally likely to do something. And here we are in a similar situation today where the market is established a narrower range, but a range all the same. And until we can get outside of here, it's going to be difficult trading. And I think what I'm going to do with the Raptor trade is I'm going to run my stop the same place I have my Eagle stop, right down below this low right here. That's kind of the bottom end of the trading range. That's why I'm only taking singles on the Raptor too today. It's almost as though your stop has to be, if you're shorting, your stop has to be way above that open gap. Okay, so now we're testing the bottom end of the trading range again. And we're probably going to see the market fall lower now. Looking at a trend change signal here in the Falcon. That might have been it for the opening range gap. Okay, so this trend line that we had here on the Raptor is broken. Right? This was our little trend line to the upside. All the trend line does is help you see what prices may be doing, because you know the problem most traders have is they micromanage their trade. Right? They look at every single bar. They actually look at a chart like this. They just look at the last few bars without any context. So what you really want is you want to have a little bit more context, and a trend line sometimes helps you see, you know, the broader picture of what's going on with prices. That's why some traders will even just use line charts. They're not interested so much in the tick by tick activity of the market. Rather, they're interested in the overall direction of the market. So yeah, the Raptor trade, I'm terribly annoyed because we had this trade initially where we sold here, covered the trade just a hair too tight. Let's see, where was that other stop? Oh, see, I should have perhaps taken this area into consideration. It looks as though that's where the market was trying to retest, where in fact that's exactly what happened, was trying to retest those highs. Ended up stopping me out prematurely. I'm going to have to take a look a little bit further back in the history of the charts, make sure that I take into account some areas like that. Okay, now getting come back here. Just going to point out this first micro macro cross signal here on the hawk. We would have to cover this one a little bit higher. I'm hoping for obvious reasons. In case we get a little bit of a pullback here. If this does develop into a full trend change, though, we should be able to see a retest now that we've broken these lows. Well, we haven't really broken the big low, but the low of the morning. Now that we've broken the lows of the morning, we should see a little bit of a retest. And that could give us another opportunity to short, providing the market is heading lower. Come on, retest. Wow, they're just really uncommitted this morning. Well, again, nothing really going on at the moment. This is the time you should have a guitar nearby or a harmonica. All right, well, we're down here testing the lows of the morning. Still didn't get that pullback that I was hoping to see. Well, I wish there was something else going on here. Sorry. Gold has tailed off a little bit, but yeah, we're just kind of stymied here at the moment. So what I'm waiting for, the eagle probably shows it best. Now that we're here at the lows, we can anticipate a retracement to the hard edge into the trading band. If it comes out of there, then we should anticipate that um, the market will resume the downtrend. That, in fact, we will have a downtrend now. No, they're not going to give it to me. Not yet. Well, in hindsight, I was looking at this first micro macro cross. That would have been a good one to put a runner on, but even so, it still worked out. And the market just keeps trickling lower. Great question, Brian. And because there is nothing going on, Brian says, can you explain how you use the support and resistance lines? There's actually a couple of ways that you can do this, Brian. Depending on what type of system you're using, since you're in the room, you're obviously using DTS or RTS. So the support and resistance lines, some people use them as profit targets. I know Omar always used to use them as a profit objective. So if he was looking to take, well, where do we get a signal? Right here. We have a trend change signal right here. Rather than have the automatic targets, he might cover the trade like this, and then he would use the support and resistance line as a profit objective. So you'll see that very often they work out that way. They work out pretty well. If you're asking how do you use them on the entry side to confirm entries, usually what I like to do is I like to see, let's say we're generating a trend change signal like we are right here. Oop, let me make this bigger. Here we go. So the market's been flip-flopping a little bit. We generate a trend change signal. So the trend line changes color. It goes from green to red. Here's the down, here's the up, here's the down. The fact that it's bouncing off of the support line, in my mind, tends to lend a little bit of strength to the trade. Now, I know some people will actually use that support zone to cover the trade, in which case they'll end up with a trade like this. And you know, for the most part, you wouldn't know it from today, but for the most part, the DTS system is usually very good at picking up immediate momentum. So the market doesn't usually reverse too much against you. And you can see that would have worked out just fine. Personally, I still like to use something a little bit more structural for my trade. I would probably risk it at least to here. The way I am, I would more likely risk it to there, and I'd end up with a trade like this. But it's kind of a confirmation tool, like a confirmation when you get a signal. If you're using a time-based chart, and actually let me try to build a new chart. 1 second here. So we'll build a NASDAQ chart. There's something wrong with my data feed. It's not the data feed, but I did something to my chart, and now I can't build a new chart. I'm just getting the data like this. And I hesitate to do anything with my charts that you see here because they're going to turn blank like this one did. I know that because that's what happened to my gold and crude oil charts. Okay, if you're using like a time-based chart, an easy way to use the support and resistance lines is to monitor how the market closes relative to the line. Now, you'll probably want to use something to help give you a directional bias, like a moving average. But if the market is approaching a line, and let's say, you know, our moving average line is down, and it closes below the line, then you could use that bar, and now we're talking a time-based bar, like a 5-minute chart. We're not talking these mean Renko bars because these are different. But if you were using a time-based bar, and let's pretend for a moment here, because I can't change the formatting on my charts right now without rebooting my Ninja. Let's pretend this was a 5-minute candle, or 3-minute, or a 15-minute, it really doesn't matter. If it closed, and we're going to use the moving average here as our directional, if it closes above the line, this would effectively become your signal bar, and then you could enter on a breakout higher. And you could once again use your next line as a profit target. And personally, I would use something structural like this area here as a stop loss. So that's another way that you can use your support and resistance suite. People often ask me about running time-based charts next to DTS. Absolutely. You can do that. Sure you can. You can use it like a confirmation tool. There's nothing wrong with doing that. Well, I'm afraid that there's not much else going on here at the moment. Just making a couple notes in my journal here. Well, days like today, they do happen, but unfortunately, there's not even anything to discuss. So if anybody else has any other questions, then let me know. Oh, see, Jim says he uses the DTS lines with the 15-minute YM, or the support and resistance suite on a 15-minute YM. That's the mini Dow. Carrie's asking, what is the appropriate time chart to be used with the Eagle? I was only suggesting a time chart in conjunction with your DTS charts. Some people who asked me this question already have a strategy or something that they've picked up that they like to use. And I'm not recommending this, I'm only using this as an example, but some people like to watch the 4, 9, and 18 moving averages. Those have been around forever, and there's nothing magical about them. But you know how traders are, we have a hard time of letting go of old habits. So some people who have approached me in the past about it would say, well, can I still run my 5-minute chart with my 4, 9, 18 moving averages and use DTS? Well, of course you can. But remember, the key is always the same. It's, will that added information help you make a decision? That's the important thing. Will it help you make a decision? Because we can throw so much stuff on our charts here until we can't see what's going on anymore. And I've shared this picture with you guys before. I'm just going to pull it up here real quick because there's not much else going on at the moment. As soon as I can find it. This was actually a student's chart, a member, prior to DTS. And you can just see there's so much junk on here in an attempt to filter out bad signals. You will never ever filter out every bad signal. And I would ask the person, well, show me a buy signal. And they couldn't. I heard a lot of, well, this kind of looks like a good buy signal here, but oh no, this was the stochastics were crossing over and the MACD wasn't in sync, or this, that, or the other thing. They had so much stuff on their chart they couldn't make a decision anymore. And that's the problem. And that's why I hesitate to mention some of these things. I'm a little bit bored because there's nothing going on in the market right now. Yeah, Floyd, you're right. Floyd says we should trade holiday weeks differently. Of course, Thanksgiving, American Thanksgiving, in a couple of days. Tomorrow is probably going to be a real mess. The week before Christmas is going to be a mess. the week between Christmas and New Year's, don't even bother. Jim says he finds that the support and resistance suite on a 15-minute mini Dow chart is very accurate. He tends to watch how the market is forming wicks on a time-based chart. That's actually a good idea because a time-based chart, you get those elongated candles, those dojis and those hammers and gravestones types things. They sometimes give you a clue where the market might be going. So of course we've had this monster decline now. So any type of trade we take, this is a macro pullback signal. I'm just curious whether it hit the profit objective. Oh, it did too. That's the nice thing about having a tighter profit objective is very often you can take advantage of a little move like that. But the big problem here, of course, is, are we going to see a retest? Okay. I'd feel a little bit more comfortable selling again. Like I think it's fairly obvious that the market's going to head lower today, but we need a little bit more structure, something with a little higher probability. I don't know whether we're going to see it in the next few minutes or not, or whether the market is just going to continue to drift. dear. Just no fun trading today. Another macro pullback brewing here in the Hawk. That could be, well, we know 2 macro pullbacks usually within a trend. So here's the first one. The fact we're kind of moving a little bit sideways. Here comes the second one. Might be getting a late filter entry here on the Falcon, in which case we could try to short again. Well, you guys, I think we're going to close up the room. It looks like the market's just going to continue sideways for a little ways here. Obviously, we are in a downtrend, so any retracements are worth considering selling. I wouldn't get too crazy about buying at the moment, even though it looks like a move here to the hard edge is probable. Well, you could maybe consider a short-term scalp back to around this 46, 37, 38 region. All right, we'll be back. Tomorrow is our public trading room, so we'll see you at the um, other venue. And then, of course, there will be no trading room on Thursday because of the Thanksgiving holiday. And honestly, Friday is probably going to be just as dismal as today. I don't anticipate a whole lot going on Friday. All right, we'll talk to you later. Well, bye for now.